Hello everyone, welcome again. In this lecture, we are going to start our second topic, which is capital gains tax. Now, capital gains tax is a capital tax. The previous one was a revenue tax. This is a capital tax, and the inheritance tax is also a capital tax. So what happens is that if I sell an asset or if I sell any shares, if I make a profit on that, I will have to pay tax on that. That is known as capital gains tax. So how to do it is simply take the sales, whatever the price you have sold the asset or the shares at. If you have incurred any cost in selling them, like agent's fee, then that will be deducted out of the sales, and after that the actual cost of the asset will also be deducted, and the remaining is going to be your gain. All right, now that is the gain on which you have to pay tax, but you will also get annual exemption like the personal allowance in income tax. So that annual allowance, which is 11,100 for our current tax year, that will be deducted out of that gain, and the remaining amount is going to be taxable. Now, when it comes to taxation of capital gains tax, there are different taxes, different rates. All of them rates will be given to you in the exam. Now, first, there are few assets on which you can claim one allowance, which is known as entrepreneur's allowance. We will see how can we claim, what are the conditions, are we eligible to claim entrepreneur's allowance or not. But if you have an asset which is qualified for entrepreneur's allowance, so you will have to pay tax at the reduced rate on that specific asset. All right, so that tax rate on that asset is 10%. So if you have an asset which is qualified for entrepreneur's relief, you will have to pay tax at the rate of 10%. On the other hand, like the normal assets which you sell in capital gains tax section, so if you sell an asset, if you have any gain, on that gain, after deduction of the obviously annual allowance, on that gain you will have to pay tax at the rate of 10% if that gain is within the basic rate band, and at the rate of 20% if it is in excess of the basic rate band. Now, basic rate band and the higher rate band is simply the one which we have already seen in income tax. So up to £32,000 is basic rate band, and on top of that up to £150,000 it is higher rate band, and on above that it is additional rate band. So up to basic rate band it is 10%, and on top of that it is 20%. So that's what I'm talking about, the normal capital gains tax. Entrepreneur relief is something else where you will have to pay a reduced rate, which is 10%. Now, one is normal capital gains tax, another one is the assets which qualify for the entrepreneur's relief, on which we have to pay tax at the rate of 10%. There is another type of asset as well, which is recently introduced in our capital gains tax section, which is a residential property. The tax rate on residential property is a little different. It is 18 and 28% respectively on the basic rate band and the higher rate band. So there are totally three categories, three different assets. One is qualified for entrepreneur's relief, on which we have to pay tax at the rate of 10%. Normal rate of tax is up to the basic rate band 10%, and on top of that 20%. Whereas a residential property, now what the residential property is, we will see in a minute when we move to our notes. It is mentioned there, but examiner will tell you in the question that it is a residential property. So you will have to pay tax at the rate of either 18% or 28%, depending on which band it is falling in. Right? So that is our residential property. Now, as I said, there are different, because there are different types of assets on which we have to pay tax at the different rates. So that's why while calculating the capital gains tax, please keep all of these assets separate, because there is a separate rate on the assets qualifying for entrepreneur relief. There is a separate rate on the assets which are qualifying, in the normal section of capital gains tax, and there is a separate rate for the assets which qualify for, residential property. So there are different rates. So we'll have to keep all of these properties separately, and we'll have to calculate the capital gains tax separately as well. But remember, annual exemption is only one, and we can either deduct it out of the residential property or normal property or the entrepreneur's relief property. Now, if it is up to you, where would you deduct the annual allowance from? I'm asking you. If it is up to you to deduct the annual allowance and you have three properties, where would you deduct the annual allowance from? Think about it. Yeah, you're right. You should deduct it out of the property where you are paying the highest rate, right? So we'll have to see where you are paying the highest rate. It is better to deduct the annual allowance out of that. You won't deduct the annual allowance out of the entrepreneur relief, because you are paying the tax at the reduced rate anyway. You're paying the tax at the rate of 10%. So if you deduct it out of the entrepreneur relief, you will be saving less tax, If you, however, deduct it out of the residential property, which falls in higher rate band, then you will be saving tax at the rate of 28%. All right. So likewise, it is planning, planning thing. You will have to think about it while deducting the annual allowance, where to deduct it from. All right. Likewise, if you have any losses, losses will also be, while deciding where to set off the losses. I'm talking about capital losses. One thing is capital gains, which is a profit on the assets. Another thing is loss on the sale of the assets. So you could either be capital gain, either have a capital gain or the capital loss. So when you have capital loss and you are setting off the capital loss, you will have to apply the same rules. You will have to set it off against the asset where you are paying tax at the rate of highest percentage. All right. So this is capital gains tax. Another thing as well, this annual allowance thing, that is only available to individuals. So capital gains tax we will be looking at from two perspectives. One perspective is from individual's perspective. If I, as an individual, sell an asset, I will have capital gains tax, and I will also be eligible to annual allowance of 11,100. Now this 11,100 is not like it is not the same thing like personal allowance. So I, as an individual, will get personal allowance and annual exemption, so I can have both of them, right? But as an individual only. If there is a company, so company won't get annual allowance of 11,100 in capital gains tax. All right. Another thing is, if you have a spouse, if you have a life partner, if you sell an asset to your life partner, then it will be regarded as no gain, no loss. So your partner will be taking the asset at the cost you are giving it to her. So whatever your cost was, your wife will be taking the asset at that price. All right. Another thing also, that if you have an asset and you are giving that asset to a friend, and obviously you will not get at the market, you will not give it at the market value, if you are kind enough. So if you're giving it less than market value, or if you're giving it for nothing, if you're giving it just a gift without him paying you anything, if you're giving a gift to someone, then we will always do the capital gains calculation, and in the sales section we will always use the market value. So if you are selling it at undervalue, then we'll always use market value. If you're selling it at nothing, if you're giving it as gift, then we'll again take the sales. We'll definitely do the sales, and in the sales section we will take the market value, and cost will be the cost anyway. Now I've told you a little bit of overview. Actually, I've told you enough of the capital gains tax, to be fair with you. Now this topic was exactly the same which we have seen at F6 as well. We will see a couple of things which are additional here at P6 level. Other things are almost the same thing which we have seen at F6 level anyway. All right. So this was about capital gains tax. Although I have told you about capital gains tax, but are there any reliefs available? Are there any ways we can reduce the tax or not? Or are there any ways we can defer the tax so that we can pay the tax later than now? Yeah, definitely there are. These things are known as capital gains tax reliefs. There are different reliefs. We will see them as well, like rollover relief, gift relief, and one of them we have already seen anyway, which was entrepreneur relief. All right, so we will see all of them in a minute. Now I've told you enough, and let me just share the screen and we can read it from the notes without wasting our time, and because I've already told you enough of the capital gains tax, so I think you're expert now, to be fair with you, and it was quick as well, wasn't it? So let's move to our lecture notes. From chapter 12 to chapter 16, don't worry, these are just small chapters. From chapter 12 to chapter 16, we have capital gains tax. As you can see on your screen, page number 46. First of all, how to calculate the capital gains calculation. First of all, we take the sales. We know what the sales is. Incidental cost of sales. So if you have sold an asset, you must have incurred some cost like agency fee, as I said. That will be deducted. Actual cost will also be deducted, and any enhancement expenditure which you have incurred on the asset to improve its face. So that will also be deducted, and the remaining amount is going to be either the gain, which is profit, or the loss. Right, so where it says, it tells you what the sales is and everything. I've already told you anyway. And then it says annual exemption for our current tax year. As I said, it is 11,100, but only individuals will be eligible to that. No company will get the annual exemption. Then it says capital gains tax payable by individuals. It is 20% and 10% up to the basic rate band, as I said, and 20% on excess of the basic rate band. But one thing that these basic rate band and the higher rate band, first it will be allotted to the income tax first, and if anything left, then we will consider the capital gains tax. So if we have employment income and the capital gains tax, first employment income will use the basic rate band, then the if there is anything left, then it capital gains tax will use the remaining bands. All right. Another thing is that we have to pay capital gains tax by 31st January after the tax year for our current tax year. And this date is 31st of January 2018. This is the key date. Dates are very, very important in P6 and F6 exam, because examiner very often examine the dates and they are worth a couple of marks. So very, very easy marks. So you must remember the dates about the taxes. It says exempt assets. There's a mistake here. It is exempt assets. So these assets are exempt. So if you have sold an car, it is exempt, and some other assets as well, these are exempt as well. Please make sure you read them and you should know them. Then it says transfer between spouses. They are separate individuals. Each spouse is a separate individual for, they will be taxed separately. So they are a separate individual for CGT, which is capital gains tax. Disposal of asset between spouses give rise to no gain, no loss. The transferee is assumed to take over the asset at its cost, as I said. So we have already done that anyway. Then it says a part disposal of an asset. So if you have a piece of land, or if you have an asset which you haven't sold all of it, you have just sold part of it, then how to calculate the cost? This is the way to calculate the cost. If an asset is part disposed, then the allowable cost and enhancement expenditure for capital gains tax will be calculated as follows: A over A plus B, where A is market value of the part sold, disposed means sold, market value of the part disposed, which is the sale value, and B is the market value of the remainder part, which is the remaining part which you already which you still have. So that is the way to calculate the part disposed of. Obviously it will be multiplied by the cost or the enhancement expenditure. Next thing is entrepreneur relief. And now we know that we have to pay tax at the rate of 10% if we qualify as if our asset qualifies for entrepreneur relief. We have to pay tax at the reduced rate of 10%. Alright, so what does it say? Entrepreneur relief will be available on the gains of following: disposal of whole or part of a business owned at least for 1 year before disposal. Now, before we move to read these conditions, could you please tell me what is the meaning of entrepreneurship? We know it simply means doing a business. We know that. So when you are doing a business and you sell your business, then you can claim the capital allowance. So that's what it says. Disposal of whole or part of a business owned at least for 1 year before disposal, and then you can claim this entrepreneur relief. When it says own a business, we have to sell that business as a going concern. When it says going concern, it means that you will have to sell the business, you will have to sell a running business. Alright, so you can claim entrepreneur relief. Then it says disposal of one or more business assets at the time when business ceases, owned at least 1 year before disposal, and the asset is sold within 3 years of the trade cessation. So it simply means that either if you sell a business as going concern, if you sell a business, or if you sell an asset which you use in the business. But there are some conditions if you sell an asset. So what does the condition say? That you must have owned it for at least 1 year before you sell it, and asset is sold within 3 years of the trade cessation. So when you have ceased trading, you must sell this asset within 3 years after cessation. Cessation, we know it means closing the business. A disposal of shares in a personal company. Now what the personal company is, at this level, just remember it as a 5% shareholding company. So personal company means when you hold an asset, when you hold 5% of the company, and the individual is officer or employee of the company as well. So if you hold 5% of the shares in a company and you are an officer and employee of the company, and that is a personal company, the company must be a trading company, and shares disposed must be owned for at least 1 year before disposal. And disposal of goodwill to a closed company by a related person as well, and you can claim the entrepreneur relief on that as well. Now this is pure theory, although I'm telling you, but it is pure theory. I cannot feed it into your mind, into your brain. So please make sure you have to learn these, and these are very, very important from an exam point of view. Now what the related person is, it says holds less than 5%, or if holds more than 5%, then will sell whole shareholding within 28 days of another company. So if the related person simply means that it must hold less than 5% in that specific company, or if he holds more than 5%, then he must have sold whole shareholding within 28 days of 28 days to another company. And we know that there's a tax rate is 10% on the entrepreneur relief, so I've already told you. Another thing is investors relief. Now this is the new thing as well, added into our P6 syllabus. I haven't told you while I was giving you the speech at the start of this lecture. Investor relief is an extension of the entrepreneur relief. So it says entrepreneur relief has now been extended to external investors in trading companies, so which are not listed on the London Stock Exchange. And investors relief has its own separate 10 million lifetime limit. For our entrepreneur relief as well, there is a limit of 10 million. So in our investor allowance as well, in investor relief, there is a separate limit of 10 million. So if an individual investor has invested the money in a company which is not listed in London Stock Exchange, you will get the investors relief. Investor relief has its own separate 10 million limit, with qualifying gains being taxed at the rate of 10%. To qualify for investors relief, shares must be newly issued and shares acquired by subscription and owned for at least 3 years. So these must be new shares, and it must have been issued after 6th of April, which is our current tax year. Then it says residential property. It tells you within these notes what the residential properties are, and it will be taxed at either 18% or 28%. Then it says capital tax planning for capital losses and annual exemption. I've already told you. Please make sure you read it. And then after that it says associate disposals. We will read this associate disposal in our next video. I will just wind up this video here, and we will see our associate disposals in our next video, which is continuation of capital gains tax. I'm feeling very, very dry now, so I'll just go and take a glass of water, and I will see you in the next video, and we will continue with capital gains tax. Thank you.